Perfect. Very good morning to all of you. I hope some of you got a chance to attend the breakfast session that we hosted around quantum resiliency that was done by Vinay Godse, our CEO. So pretty interesting session. So officially, welcome you to the 5th edition of the DSCI FinSec Conclave. It's after 3 years, we are doing this in person, of course, because of the interruptions brought on by COVID. So yes, excited to be back and welcome to the first masterclass of the day that we are hosting. So the reason for conceptualizing masterclasses is to, probably take a deep dive, which we don't get to do in the track sessions, the breakout sessions, although we do try to cover a wide gamut. But masterclasses, are a means where we can actually take, probably do a little more thinking through on a particular theme. And the theme that we have stipulated for this particular masterclass is around regulatory compliance intelligence, and of course, pertaining to the financial sector, since the event is dedicated to the financial sector. So I think the overall landscape and the space of regulatory compliance is evolving very rapidly, very fascinating, but at the same time, the challenges it brings along with it, and how can technology enable the companies in order to be a little better compliant, in order to better manage the hassle brought on by the multiple compliances, the directions, the frameworks, coming up from regulators from multiple directions. So to make sense, to comprehend, and come up with some, solutions which can help you manage a little better. So this is the workshop that we have, the masterclass that we have conceptualized for you today. Of course, the masterclass would be delivered by the team Deloitte, which you can see on the stage. In order to kickstart the deliberations, let me invite Mr. Munjal Kamdar. He's partner for risk advisory for Deloitte India. Munjal will set the context for the overall flow, the rationale why we are hosting the workshop. And one humble request from my end would be to make it a little dialogue-based masterclass, rather than having one-way conversations. Of course, one-way conversations would set the stage, but I would definitely need support of all of you in order to chime in and ask as many questions, because from a compliance standpoint, I'm sure you would have some observations, some perspectives to share. So Munjal, over to you.
Thanks, Aditya. Thanks, DSCI, for this opportunity. Very happy to be here with all of you and conduct this masterclass on RegTech, what we call as regulations related to technology and compliance with the same. I have worked with financial institutions throughout my career, right? Maybe around 20 plus years now. And there are certain unique things about working with financial institutions. I'm not just talking about banks, right? But insurance companies or asset management, payment processors, all of them, card payment networks, all of them put together. The first thing is that they are always one part of any transaction that happens within the economy, right? So you need to settle, you need to pay. And therefore, there's always one financial institution that's party to a transaction, right? So that's the first. The second is, what we've seen is that the business for financial institutions always grows at double the rate of the GDP growth, at least at double. So if India is expected to grow by 6% or 7% in the coming year, the business for financial institutions will at least go by 14 to 15%, right? So they become an essential part of any nation's economy. The third part that we've seen is that financial institutions tend to be very digital in nature, right? So the only other industry that's similar is the media industry, right? What makes it unique is that you can always request for a service and you can also provide the service online, right? In most other industries, one part happens offline, right? And the other part happens online. So media and financial industry are two industries where you can do both digitally. And that increases the dependence on technology, right? Now, putting all this together, what we've also seen now, given the nature of the business, financial institutions have been a lot of focus for regulatory authorities, right? Because they are an essential part of the economy. They control the information about citizens, about corporations, about the finances of a nation. And therefore, what you would see is that typically regulations are very advanced when it comes to financial institutions, right? Typically, the leading regulator, whichever body manages and governs, right, financial institutions, is always trying to lead in with regulations. Now, you may turn around and say, look, we don't have a regulation around blockchain yet. In fact, India does not have a regulation around privacy yet, right? It's still a bill, it's not an act. So there could be some time lag, but typically regulators make up for the essential parts very quickly, right? So RBI released a document called Payment Vision 2025, right? In 2022, last year, they laid out a vision as to where they want the payment infrastructure in India to migrate. And looking at the success of UPI and other payment mechanisms, you could say a lot of it is turning into reality as well, right? So those are the parts that you would see. Now, as consultants who work with financial institutions, the challenge that we've seen are twofold, right? One is for financial institutions to understand correctly what is the expectation from the regulator, right? And you can have very detailed rules-based regulations, or you can have something like data localization, which when it was introduced was a one-page document, right, in 6th April 2018. And you are supposed to understand everything else that needed to get done after that, right? So one is understanding what the regulator's expectations are, being able to translate it in a manner that business stakeholders and IT understand those requirements. And finally, also getting your payment ecosystem geared, your partners, third parties, alliances, vendors, call it what you may, geared to make sure that they get compliant, right? So those are the typical challenges that financial institutions face. For a very long time, right, today we also have Visa represented here, Vipin is here, we have a fireside chat later today. You know, credit card transaction and card payment networks always worked as a 4-party transaction, right? If you look at the current environment, maybe it's a 14-party transaction. It's no longer a 4-party transaction, right? So the number of partners, processors have increased manifold, and making sure that that ecosystem also becomes compliant is a major challenge. What we hope to cover today, right, is to give you all an overview of the requirements at a high level that relate to technology in India, right? What are the essential main components that regulators expect across? Of course, RBI is the main, but you also have requirements from SEBI, you have from IRDA, and depending on your business, many of them would be applicable. And then try to also give you a picture as to how we've seen industries adapt to these changes, right? And then maybe I hope that Vipin will give us more insights into how the largest payment processor in the world, right, Visa, is also grappling with that. One request I have is, as we do this, in order to make it interactive, as Aditya was saying, we have some survey questions on Mentimeter. I'm sure most of you would be familiar. All you need to do is go to menti.com and enter the 8-digit code I give you, so you can at least answer questions. Hopefully that will make it more interactive for all of us, and we can take your real-time feedback. Feedback is not on how well I'm delivering this. It is on more generic questions on the industry. So please do be ready with menti.com on your respective cell phones. Today, by the way, other than myself, I also have my team that is going to cover aspects for you, and it's great to see so many women on stage. So we have Sanjana, Vijaya, Sharda, Lakshmi, Sagar, all of them who will add some more pointers and insights into what we want to cover. Okay, so let's first talk about the landscape here, the regulatory landscape. Right, so is it working? It's okay, right? Yeah. So as you would see, there are about 30 of these regulations that you see on this slide that come from various regulators, right? Mainly from RBI, but also federal acts like the IT Act. We don't, as I mentioned, we don't have the Data Privacy Act yet, it's a bill. We've been tracking regulations related to technology since 2000, so last 22 years, 23 years. The total number is close to 100, right? We just put the essential 27 of the top ones here. You would find possibly one or two missing. For example, I know that SEBI issued one on cloud in 23. I don't know if that's here already, maybe it's not there, but you would find those as well, right? It's there? Yeah, okay. So the 27 key ones are here, but there are other 73 which are not here. But that's the landscape that you're talking about, right? When we deal with our clients, at times there's a question saying, is that regulation applicable to me? We were not even aware, right? I'll give you a prime example. If you look at data localization, it was introduced on 6th April 2018, right? Till 2020, banks believed that data localization didn't apply to them. Most banks didn't take a single step to comply with data localization, do anything, because they said, okay, it's for payment processors, bank is not a payment processor, right? So the very basic fact, baseline, saying what are the regulations applicable to us as an entity, right, is one challenge that I find clients grappling with. The second is also the indirect impact, right? So for example, again, if I go back to data localization, data privacy, or as an example, not only has the institution got to be compliant, but the vendors or third parties or partners who process data on behalf of that organization or the bank, as an example, also need to be compliant. It is true for data localization also. So there could be an a software company or a Deloitte, right, which is not a licensed bank or under any regulation of RBI, but may get impacted indirectly because we do serve a bank which maybe provides us with some payment information as part of our services, and we need to get compliant to that, right? Otherwise, the bank is not compliant. So those aspects are typically not clear to organizations. So with that spirit, maybe this is our first question on the Mentimeter. If you go to menti.com and go to that code there, 38582670, you would see this question. And if you can have some feedback from each of you. Okay, so you see the real-time data here. By the way, these responses are anonymous, so number 4 can be more also. And we don't have anyone from RBI in this room either. So I hope so. I don't know for sure though. I agree. I agree. I agree. In fact, we'll talk about it. That's an interesting point you bring up, sir, because even as a card payment network, right? They would say, like, if you look at the tokenization requirements, right, a certain burden has been imposed on the card payment networks, on the ecosystem, because I guess RBI understands also that maybe they can't reach out to so many players. So let's distribute some of the workloads. I mean, I'm sure the card payment networks don't enjoy that, but that's how it comes down as well. So yeah, I agree. Okay. Sorry, was there a question? I think someone at the back rows maybe needed. Okay, fine. Okay. So good. Thanks for this. We have about 42 responses. I'm glad that only one person has said easy. So maybe you don't need to talk to me at all later on. But all those who mentioned moderately difficult or very difficult, not to oversimplify or overcomplicate, right? But it is, let's face it, it is a challenge, right? If that makes you feel better. Most organizations we talk to do struggle with their set of compliances, understanding, complying, implementing, and monitoring, and most importantly, reporting back, right? The challenge is in demonstrating compliance to the regulator, right, or to an auditor like Deloitte. Good, thanks for this. But please keep your phones on because there are a couple more questions coming down as well related to this. So again, what are the implications? If you don't comply, we see issues around cease to operate. That's the worst case scenario. Nobody wants to be there. But also challenges around how much do we spend, right? I mean, there has to be a business case. Regulatory compliance does not need a business case, right? Because it's a cost of doing business. But the business should also justify, right? The volume of business, the type of business that you do, the geography that you operate in, right? And also, how do you translate these requirements in a manner that your business stakeholders, especially IT, can comprehend? Because they are running infrastructure with certain other parameters in mind as well. It could be efficiency, it could be speed to market, it could be quickness of response, right? And also making sure that your ecosystem is compliant. So these are some of the typical challenges that you would face there. Now, what is the high-level view, right, of the way in which organizations do adopt these? So what you see on the top there, right, are the regulations. We spoke about some of them, maybe not all of them are here, lack of space, real estate on the slide, but basically all those regulations. If you largely look at the middle layer, right, these are the IT domains under which they fall, right? That's what we've observed. That if you really get your parameters around these 15, 18 domains, right, you would be able to do a fairly good job of making sure that your organization gets compliant, right? Now, again, there are different ways of looking at it. So I'll give you a lot of examples. Let's say data privacy, right? banking or what you would call as banking information, my own individual's KYC data, right? Name, address, whatever you call it, sensitive information, PII, whatever term you call. Under data localization is allowed to be offshored for banks, right? That's an exception RBI made. However, it may or may not be allowed under the PDP, the bill which is yet to become an act, right? We don't know the form of it yet. So you could also at times have conflicting, that one regulation allows something, the other regulation does not allow the same thing, right? And you have to understand what will be the way in which you will construct your compliance strategy, right? So typically our advice is always go for the tougher one, right? That is what is true. So that's the one you will have to meet. So these domains that you see in between are the ones that will enable best practices around these domains will enable organizations to become compliant regardless of the regulation, right? Ideally, if you implement the best practices, you would be 90% there. There could be 10% uniqueness about a requirement which you will need to customize. And what you see in the bottom blue layer, right, those are the stakeholders that you're going to address as compliance officers, legal officers, or whatever your role is. If it's related to compliance, you have to convince these stakeholders here as to what you need to do, why they need to do it, and how they're going to do it, and how they're going to report on it, right? So that's the overall high-level framework that you need to look at. Some process ways, I mean, again, we are consultants, so we typically always operate with a chevron and a process and an approach and a methodology, right? So, but for us, it's a logical thinking as to how it happens. Now, I'll tell you the way we get engaged, or when we work with clients, typically a process is also underway, right? Nobody's waiting for a consultant to come in and do something, right? I mean, obviously, organizations take their own initiative. They already have a program that helps them identify regulations and hopefully become compliant to them, right? The aspects around what we've seen with clients is issues around requirements validation, understanding the gap, right? As to what the new expectation is from the regulator or the modified expectation is, what needs to be done to fill that gap, right? What is the process that needs to get changed? It could involve technology as well. It could involve people as well. And finally, how do you remain compliant and continue demonstrating compliance, right? So where we've seen clients struggle with is also the ability to comprehend what is required to be done and how do you document that as a regular output so that you can demonstrate compliance to a regulator internally, internal audit. It could be your chief compliance officer, it could be your board, whichever stakeholders you need to address. So that's the high-level process there. And in terms of continued compliance, these sort of artifacts that you would need, right, are these parts of your program, right from the framework, which needs to get updated regularly, to the manner in which risk assessments are executed, right, the reporting that is provided, reviewing architecture of existing infrastructure as well as new components. If there are managed services and outsourcing arrangements, how is that managed? And finally, automation, right? Typically for medium to large size organizations, what we've observed is that you need a great degree of automation in the tracking of compliance also. If it continues to rely in some Excel sheets which are disparate within the organization, you're already fighting a losing battle. You're not going to get anywhere, right? So high-level components that are required. I'm just cognizant of time as well. Now, what we are going to do in the next few slides is take you through some of the critical compliance requirements that are recently hit financial services organizations, right? So we are going to cover one stream on data localization, one stream on tokenization. The third is on the RBI IT outsourcing guideline that came out on 10th April 2023, the most recent one. And finally, looking at a comprehensive look at cyber-related guidelines, right? What should organizations do to comply with that? So that's what my colleagues will cover. Again, I'm just happy to pause here and see if there are any queries in the audience based on what I covered so far. Yes, sir.
Hello.
You can give him a yeah.
So you mentioned something about PDP, data localizations. So suppose in case of SEBI cloud security framework, with SEBI mandate to have data localization within India, but PDP does not mandate those things. So will that supersede, or we have to comply with SEBI requirement? The other question what I was having, like understanding the what exactly the providers mean to get the output. Like SEBI has mandated to get the logs from the RE, from the providers. Like with the vendors who are providing the service, it has not mentioned anything on SaaS, PaaS or IaaS. So understanding those kind of requirement, how Deloitte or any partners can help us in understanding what exactly they mean to say.
Okay, sure. So two things. So as I think the two questions you asked, right? One is if the regulations are really possibly contradicting or not covering one area and the other. As I mentioned, always take the more strict one when you build your compliance program. So if SEBI is not asked for something, but RBI is asked for it, then do what RBI says, right? Whether or not SEBI asks for it, and vice versa, right? Now, cloud is a very interesting topic. You see cloud security here as one of the domains, right? And frankly, on cloud, there are no easy answers yet because cloud is a very different environment. So I'll tell you, the environments on cloud are very different. One is you have three big providers, right? All of us know that AWS, GC, and Azure, right? These are the three big providers. Now, organizations could be leveraging that through their own landing zone and hosting their own application. That is one scenario. The second is you would have service providers who are leveraging any of these three, right? A service provider who's leveraging any of these three. The third is there are also service providers who don't use any of these three, but they build their own clouds, right? They have their own SaaS environment, a private cloud, through which again they provide service to the financial institution. This is complex, and as you may be aware, all the big three give you access to very little data, right, in terms of compliance. Normally, these are standard SOC 1, SOC 2 reports, and they will as well tell you download it from the website because they have too many clients to address these specific requirements, right? Now, having said that, what we've seen is that there is an increasing cognizance of compliance requirements within the big three also. So, for example, after data localization, you have AWS, for example, that gives you an instance in India, right? Both DC, DR that you can choose, and the availability zone does not go out of India, right? They give you that guarantee as well. So there have been changes that have been made within cloud service providers. I think the way to address compliance when it comes to cloud is both the things. One is what are the standard offerings you're getting from your cloud service provider, from your CSP. And the second part, more importantly, is how your organization has configured the cloud, because the security within the cloud is the responsibility of the user organization. And making sure you get that data downloads that you need to offer as proof of your compliance. Because there are a number of tools available with all three to help you manage your compliance requirements, right? That's the way it would be. Hmm. I think it's an ongoing dialogue that you would have with your cloud service provider and get access to whatever data that you would be able to get from them. Plus, based on the mechanisms that you configure, because there are a lot of configuration items available within SaaS and PaaS environments also, which you should leverage. Yes, sir. If you can give a mic to this person here.
Hi, my name is Sahil.
Yes, Sahil.
I'm from Salesforce. So just wanted to understand, because we have a lot of clients in the regulated sector. There is a lot of maybe regulation or governance on the third-party service providers also, right?
Correct.
Like you said, there are big three, right? We provide services on the big three. So how do these regulations impact the third-party providers? Is there any responsibility on the third-party service providers from a regulatory perspective? Or is it just the primary responsibility of the regulators? And like you said, there are a lot of SOC 1, SOC 2 reports that we provide. So how does that work?
Sure. So I think, firstly, Sahil, as you mentioned, organizations like Salesforce, right, are a very critical part within the value chain, because you provide services which are essential to any organization. And what would happen typically, we've seen, is that sooner or later there is a regulatory impact, right, of whatever service organizations like Salesforce provide. Now there are a couple of things. One is when you provide service to an industry or sector, right, what would happen is that the, let's say, regulator, right, would always ask the regulated entity to respond, right? They really don't care who is a service provider, obviously, right? The accountability always rests with the regulated entity, right? And you would see that coming to you as a step down or a flow through, because when the regulated entity needs to report, they will reach out to the service provider. So the first thing that we've seen, and we would suggest also, because as the ecosystem gears up, is that based on your customer target as a generic industry sector level, right? You as a software provider, a service provider, should build in those requirement of controls, because even though the regulated entity is not, the regulator is not going to ask queries from you directly, indirectly you will be required to respond. And second is that chances are that if you don't meet those requirements, the clients will not select the service provider. So you're also going to lose business sooner or later, right? So that's the way we have looked at service providers and helped them frame their own architectures in a manner. Like we worked with a certain SaaS organization, I'll not name them, a service provider on GRC, migrate their entire instance into an Indian geography, because otherwise they could not sign on banking customers, right, given the requirement. So I think that will be the flow-through impact that will happen. Any other queries? Yes, sir.
So my question is on the mighty government of India has impaneled lots of cloud service providers, right? Means what is the type? Because on the website it doesn't mention whether they are complying with, say, SEBI guidelines or whether they are compliant to RBI guidelines, right? So I think that should also be taken into consideration by the government of India when they are impaneling CSPs, right? So
Okay.
otherwise that empanelment doesn't mean anything, basically.
Agreed. So I'll tell you the way it works with the regulator, right? So the regulator's job is always to publish requirements for that industry, specific industry or sector, right? And that's why they would ideally stop, because each client is free to frame their own strategy as to how they want to comply. Now, the second part we've seen is it's very difficult for the regulator to keep tabs of compliance. So, for example, if you mention, let's say, cloud service providers, for an RBI or a SEBI to know which cloud security, cloud service provider continues to be compliant, very difficult for them to find. It's not their job either, frankly. So the way we've seen the regulators normally do this is that they ask for a system audit report, right, on a regular basis, right, from all organizations. And that's when they compile and correlate information as well. So we are very used as auditors, right, to receive queries very specific from the regulator saying that, look, this part you've said in the report, but we're not convinced that this, how have you concluded that this particular application is compliant? Please clarify what are the tests that you ran, right, and show us the results based on which you reached this conclusion. So they don't accept auditor reports at face value, right? We are very used to responding to detailed queries based on the tests that we done, the audit process that we followed, and the conclusions that we reached. But that's the process being followed by regulators, right? They are not certifying from their end that certain service providers are compliant, because I think it's impractical and very difficult for them to do that. I mean, frankly, I've seen that it's extremely difficult. So I hope I answered your question. Okay, so without much ado, now we'll move to the next. I know I'm just cognizant of time. We spoke about data localization. Before we start, we had a query on that as well. If you guys know, yeah, this is the one. It's the same code, 38582670. Okay, but we get a trend. So I think one is a lot of organizations have already addressed data localization, given the fact that it's almost 5 years old now. But this middle bar that we see is again important, because yes, we found a lot of third-party ecosystems, maybe to the gentleman's question earlier also, they're not sure whether data localization is applicable to them, and that's where they struggle, right, to understand. So I will have Sanjana give you a high-level view on how data localization can be smoothened, or the journey towards data localization quickly. Thanks. Over to you, Sanjana.
Thank you so much, Munjal. Hopefully, can you hear me? Is that fine? Okay. So just leading on to the queries that a couple of people had, right? So I personally, I mean, data localization has literally been my bread and butter these past 2 years. I've worked a lot on this particular regulation. So coming to the applicability perspective, so I would just like to highlight, because a lot of cloud-related things were brought up. So personally, we have worked with a SaaS provider who used to provide services to a regulator, and the regulator had requested that he be compliant to the regulation, which is data localization. So he did approach us, and we had to create a system audit report for him for the services that he provided to the regulator. And when I say regulator, he was also providing services to other banks as well. So we did do a compliance check for that particular entity who was a SaaS provider, and we did provide a SAR for them. Like I mentioned, Munjal clearly called out some time ago. So the applicability is not something that you assume. Never assume that, DL will not be applicable for you. when I say that, I'll just move on to the next slide. I very graciously have 6 minutes to cover a lot. So, okay. So just to, this is just what we've picked up from the RBI FAQ 2019 June. But if you can see, this basically talks about all the banks that are operating in India, be it foreign banks, be it Indian banks, any entity who is approved by RBI to operate as a payment service provider. It's definitely applicable for them, which is pretty obvious. And with the third particular content that you see here, RBI has tried to cover all the third parties or intermediaries who are involved in providing services or support to these payment entities. So here you can, so you cannot say that something is not applicable for you, because if you're working with a partner who's a bank or who's a financial provider, they may, like Munjal said, they may not be willing to do business with you in case you're not compliant to data localization. So we've had a lot of cases come up that way, where you literally feel that the entity is not really even governed by RBI, but it is not safe to assume that it is not applicable for you. Okay, so this is just a very short, 3-step procedure that we've tried to summarize on, what entities need to do to comply with the regulation. So like I saw that, multiple people are already compliant to the regulation, but we still have that middle 50%, which is not clear about their applicability. So these are just some steps to identify your applicability and also then to understand how to go about the data localization audit. So if we start with inventorization and classification, which is a classic thing that you do for any audit, right? You need to concentrate on applications that store India data. Very obviously, like I don't need to talk about that because that will be your scope and that will be where your starting point is. So once you figure out what are the applications that store India data, you need to then categorize and figure out whether they process domestic data, whether they process cross-border data, and currently, where are they hosted. So these are some 3 things you can do. And then you also can identify like the same questions that came around, whether the third parties are handling this application, or is it's your own proprietary application, and it's your own application, basically. Then when we move on to the remediation approach, basically, that is the important part. So we've not called out all the regulations here. The major ones that I'm talking about is the April 2018 and June 2019 FAQ. That's what we've restricted this entire slide to. So like you can see here, right? So for the applications, once you've categorized them, if they're already in India, it's the best part which RBI loves and everyone loves, because you don't need to really do anything about those applications. And then if, for example, if the application is overseas, right, you need to ensure that you comply. For that, you can use any of the 2 approaches. One is the obvious one where you onshore the entire application to India. But that does not come without its cons, wherein you will have a lot of capital expenditure. You will need to ensure that the security is there for the new application that you put in India, etc. So, there is another leeway that RBI has provided, wherein they say that you can continue to host things outside, but only for a period of processing period. And they have put an upper cap on it of 24 hours. So once you finish the 24-hour, you need to ensure that data gets deleted and the entire data is then localized to India, okay? So that is just something that we've written there. And then comes your cross-border payments. So what I talked about right now was the domestic payment localization. And then for cross-border, RBI has just said that, just get 1 copy to India, that's enough. Because the other currency regulator may also need that information, right? Okay, are you guys with me, or is it too much of gyan? That's fine, right? Okay, so, okay. And then like Munjal said, right, if a third party is handling an application for you, you just need to get a report of compliance from that third party. So you need to govern them and ensure that they comply to this particular regulation. And once you've done this remediation approach, you're ready with some things, then you need to get yourself certified by performing a SAR with a certain empaneled auditor. That's where we come into picture. We will do the audit for you. We will provide a SAR which you can then submit to the regulator. That's what we've done for a number of banks, for a number of payment aggregators, payment gateways. We've done it for the SaaS provider that I talked about. And that's not where it stops. So RBI also has a continual compliance requirement at half-yearly intervals, but that is more of a internal self-certification that you just need to provide to the regulator that you're still compliant. And in case there are any changes in your environment, you need to call that changes out, and you also need to ensure that you're still compliant. Although the application changed or new applications came in, you're following localization by design. So next time, you probably need to have a check at your vendor level. If you're onboarding new vendors, you need to understand if payment data is shared with that vendor, where will the hosting location be? And by yourself as well, if you plan to make some changes to your existing application, your SDLC can actually have a check where actually you figure out whether the localization is violated or not. Okay, so this is something that we had prepared when we were talking to, when we were performing the SAR, etc. So these are roughly 6 categories, which we believe should, cover your entire infrastructure. So we believe whatever applications that you have in scope will fall into one of these 6 categories. I'll not dwell more on the categories and what they talk about. I mean, it's just English, but these are more or less what we have figured. So you can have test cases corresponding to each category, and you can then, it'll just narrow down the scope and the work that you need to do. So if your application falls into category 2, you have 5 test cases to test out for that application and ensure that it remains compliant. So here we have categories about the processing outside, the ones that are already in India, the third one, which is, about your cross-border ones, and then there is some aggregation or some pass-through systems. So this is where, this is what I've been talking about is all what the regulation says. Now comes the main thing, which is the pain points that, because I've worked in this for the past 3 years, I understand, what sort of questions come up from the banks, from the industries. So I'll just move on to the other slide. Okay, so the common discussion points you can see here. I'll first start with exemptions to banks, right? So there is a circular or a letter that RBI provided to the banks, which was dated 30th September of 2021. So there are some exemptions that are applicable only to foreign banks that operate in India, wherein they are allowed to store about 8 fields outside India. So that is basically after the banks literally went back and forth through the IBA, they reached out and then they came back. So eventually RBI had to, give some sort of leeway to them. So banks are allowed to store 8 fields outside as well. The India localization remains the same. Then there is the hashing and tokenization. So the last circular that RBI called out on this particular issue was on 15th Feb of 2022. So there RBI said that, certain banks were trying to evade the compliance. I mean, not banks as such, but everyone was trying to evade compliance by saying that they won't delete the data, but they'd rather hash it, they tokenize it, they encrypt it, and continue to store it outside, right? Which is basically evasion. So they clearly called out that, deletion equals deletion. You cannot keep anything outside in whatever form that you want to. And then the other issues that we face is, we don't have answers to all of them. We do discuss it out with the clients and jot out the best action plan for each of these queries that come up. So there's the major issue on dealing with backups. So RBI has very graciously allowed 24 hours processing outside India, but they never talk about, within that 24 hours, if there is a backup running during that period. So there may be India data that may be in that backup and be overseas. So that is an issue which people keep coming to us about. And eventually they feel that there's no solution but to localize it. But we do have certain suggestions and recommendations that we make in. And then coming to your post-transaction activities, wherein once the entire transaction life cycle is done, you may need to fetch that data back after months or after years, wherein you want to use it for dispute, etc. RBI does have some guidelines on post-transaction activities, which needs to be done on a near real time. So that's the case. And then there's the start time T for localization, right? So that is something that, like I keep saying 24 hours, but people don't know when does the timer start for 24 hours. So we do have different recommendations for a network. We do have different recommendations for banks as to when the timer for localization starts. Okay, so that's just the just tip of the iceberg. That's just some 5 6 points that and the issues that I have written here. But we have hundreds of issues that mainly come up from banks and from other card payment networks. So Visa here was the only one who could evade this, because RBI has a zero tolerance policy. So Visa was compliant, but as we know, the other three large networks were sort of banned because of this regulation. So after having largely worked with a lot of card networks, Deloitte does have, we have a sort of framework that we use for when you want to comply to data localization. So that's it. So just my 2 cents here would be the applicability is a big issue that we feel clients come across. And the second would be the queries on how to comply, when to comply, etc. I'll just, any questions? Sorry, yeah.
Like in case of NRI or NRO or some people working abroad, so they will be still having accounts with the Indian bank. So what is the regulation for that? Because we have to comply with the GDPR or any regulations, and plus for India regulation as well. So how should we do that? And second piece is for the assessment. You mentioned something on assessment which have to be done on the half-yearly basis. So do RBI have any checklist for that? Or it is only just a tick mark, okay, we are complying to that and we can send a mail to RBI?
Understood. So the first question is something that one bank recently asked me, the NRO, NRE scenario. So in that case, what we recommend is, because the NRO is an account that the individual has, which is in India, right? And he will be performing transactions on INR. So we look at the underlying currency, right? So if the transaction is an INR transaction, then we recommend that you localize it. But if it's INR into USD or INR GBP or any of those where one leg is INR, then you just need to bring a copy to India. But for that, we need to get into a discussion on how an NRE account is designed for that person. So there'll be some amount of segregation based on the currency of that. And coming to the half-yearly review, we have had cases where we've done that for a couple of banks because they just wanted a compliance check internally. So we did the assessment for the bank. It was just an internal report that we provided, and then they were comfortable to just give a sign-off to RBI. But otherwise, we've seen a lot of banks also do that themselves. There's no checklist that RBI has given. RBI has very little to say on localization except that bring everything to India. So that's the only thing.
Just one point there to add to what Sanjana says, the half-yearly certification, right? RBI will ask for details as to how that self-certification is issued. So there would be a requirement to have an internal study report or an external, whichever way the bank has done it, to be able to demonstrate compliance. It's not just a question of just issuing some letter and RBI will accept that letter. So I hope that's not the impression.
Yeah, there were some other questions.
I have a question. Actually, in PASS or IAS model, it's okay. But what about when, for example, a bank says that, yes, we are using email from a CSP, a cloud service provider, for example, Google or like that. And they says that, yes, we want to share some data over email, payment-related data. So whether they are compliant or whether any CSP confirms that, yes, they are compliant to that guidelines, cloud-related guidelines or localization-related guidelines.
Understood. So what you're asking is whether data sharing over email, how is that getting localized, right? Because that's on cloud.
Right. For
Understood.
example, in IS or PASS, they have availability zone or region. But
Yeah.
what about in SaaS, especially in email cases?
Correct. So for now, Munjal can add in if I miss out on any points. But for now, what we have seen that most banks cannot comply to the email requirement. They try to restrict sharing of data over email as far as possible. But we have this thing where we call that out as a fact in the SAR report. And we've called that out, and the regulator has, they're not yet come back, but we are waiting to see if they come back on that particular thing, because the banks, after multiple discussions, they sort of agreed that, emails is something that they cannot do without, and, they cannot localize it in India because it's the Office 365 that they're using. So we just go ahead and we come on a consensus that, you can store it in emails. I mean, we don't obviously agree to that, but we call it out in the report as it is. and we wait to see what the regulator's call will be on that. Because that is more of a, they're trying to process and make the entire payment data in India, which itself is a big ask for them. But emails is something that most banks, as of now, that I know of, they have not really considered localizing the entire, their exchange servers. Munjal, if you want to add anything on that?
Yeah, just the principle remains, as we say this, that India data has to be localized now, whichever shape, form, or manner. So on the email example, we also had complaint mailboxes, right, which are specific to India, which have been localized and so on. So sooner or later, I mean, data has to come to India. I mean, there's no doubt in terms of principles of the regulation. Any other questions? A lot, many.
There's a lot. Probably they don't understand what I said.
So I have one question about, say, if a bank, for example, has branches outside India, what happens to that data on local PCs or something? How is that going to be addressed?
Okay, so that'll come, one part will be under your global employee access. If the outside branch has India data, then you need to handle it as per the principles. Like Munjal mentioned, wherever your INR currency is being used, you need to handle it accordingly. Global employees, they should be the download and the extraction rights to global employees should ideally be avoided, is what we recommend to banks. So
See,
they
again,
can,
sorry,
yeah.
but I'm just saying the regulation is for India payment data. So if HDFC Bank has a branch in Middle East, frankly, if there's no India payment data, this regulation doesn't apply to that. I can open any account for any NRI sitting outside India and do whatever, right? But if it's local to India, that's an application. If it's cross-border, then a copy has to be in India.
Correct.
Okay.
So the principle remains the same, whatever be the case.
What we'll do in the interest of time, I'm sorry, I know there are more queries. We'll take them. Give us time at the end of the this masterclass, because we just need to cover some other aspects on tokenization, if you don't mind. I'm sorry, I know there are a couple of queries, but we'll move to the next part, which is on tokenization. Now, again, as you may be aware, for card payment networks and payment processes involved there, there has been a requirement around tokenization as well that has been specified by RBI. We've been working with the card payment networks in helping compliance as token requesters and how these tokens are utilized, stored, and so on and so forth. But to give you more clarity, I'll have Vijaya present on this. Thanks, Vijaya.
Okay. All right. So before I start talking about my topic and introduce it to you all, I just want to know how many of you all here, how many of the audiences have traveled through metro in your life? At least once. Just a hands up. Great. So it's going to be super easy to explain tokenization. What do? We give money. We get a token in exchange, right? So what's happening? Your money is being replaced with a not so important token. I say not so important because that token is useless outside the metro, right? The moment you come out, you just dump it. So that's exactly what tokenization is, replacing sensitive information with non-sensitive information. All right, so now how do we know that, how is this concept of tokenization used in the digital payment industry, all right? So that's exactly what I'm going to speak about in the next 5 minutes. To start with, we need to first understand the applicability of that regulation to us, right? So the answer is very simple. If the entity is participating in generating a token and in the subsequent life cycle of a token-based transaction, it is impacted by the circular. All right, so let's start with token generation process, because card payment networks and card issuers are authorized by the regulator to act as token service providers, meaning they are allowed to generate tokens. Now, because you have card payment networks and token service providers have access to tokens as well as card details, definitely they are impacted by the circulars. Next is payment aggregators, token request, payment aggregators, gateways, and merchants. All of these entities act as token requesters. Now, since they have access to token, again, they are impacted by the circular. Last but not the least, the entity which comes in the payment ecosystem or payment chain are acquirers. Now, acquirers also have access to card on file data. So that's why they are also impacted. So this is about the applicability basically in the entire payment ecosystem. If you have anything to do in generating a token or have access to it or are participating in a token-based life cycle, you are impacted by the regulation. And now, once you know that, okay, I am impacted by the regulation, next is to comply to it. right? So how do you know what are the regulations and everything? So I'll just broadly speak about certain important uh, prominent requirements that all the impacted entities have to take care of. And one of them, or rather the first of all, is information security. So if your entity has access to card and card data, token and token data, the first thing to do is securely store them, right? There's no question about them. Encryption and all, the storage has to be taken care of. The second is access restriction. These are very sensitive elements, so it's very important that you store them securely. That was the first requirement. The second is retaining the integrity of token generation process. Again, this particular requirement is applicable to all the impacted entity, basically token service providers, which are card payment networks and card issuers. Now, what do you mean by maintaining integrity of the token generation process? It simply means the TSP, the token service provider who has generated the token, only they should be able to detokenize it. Your algorithm should not be able, the other entities should not be able to crack your algorithm. Now that's the second requirement. Of course, our favorite, additional factor authentication, has to be followed, has to be practiced while generating a token or authorizing a token-based transaction. The next, or the third control that all the impacted entities have to take care of is putting in a smooth dispute resolution process, followed by giving your customers an option to deregister a token at any given point in time. And they should always have an option to report any token which they feel is exposed and has the risk of unauthorized usage. So these are the 3 points that we spoke about right now. These are impacted to all, basically all entities have to take care of this. Now, the next and the crucial, or rather the crux of the entire tokenization directives is that only card payment networks and card issuers are allowed to store the actual card details, which means all the other entities in the entire payment ecosystem have to delete the card details. Now, of course, there was an exception here, and the exception was very limited to guest checkout transactions and post-processing activities like settlement, where for card payment, for merchants and payment aggregators, T+2 was the maximum time where you could save that card on file data, and acquirers can retain it for T+90 days. That's it. But at present, based on the latest circulars that have been released, all the entities have a time until 31st of October 2023 to devise an alternate mechanism to handle such cases. So all these cases are where you need to store card on file data beyond the permitted timeline. So if there's a case like that where you need it more than T+90 days or T+2 days, you need to devise an alternate mechanism, and this is a deadline that we have. All right, so this was about, the very crucial part of tokenization. The next is the monitor of the class. So basically, card payment networks are appointed as the monitors by the RBI. Everything related to tokenization, card payment networks have to ensure that all the token service participants are complying to it. Now, this is a very difficult task because firstly, card payment networks have to take care of their own security. They have to ensure that their own tokenization requests are logged, monitored, suspicious activity is reported, take care of token vault, card details. And on top of that, you have to ensure that your TSPs are also following that, right? So that's where we kind of make the job easy. We do the audits for token service participants also. Now, when we do an audit for token service participants, the main thing that has to be checked is the certification of all the systems used. Not, when I say token service participants, it's a blanket term I'm using for the card issuers, the acquirers, and payment aggregators, token requesters, basically everybody who participates in the payment system. So audit has to be done for them. It should not just be system audit, but it should include your security aspects also, right? So that's from a TSP perspective. Now, so these are the broad elements. Of course, there are many other things also that have to be covered, but these are primarily what needs to be taken care of. Now, the next, these are as important as the points I discussed about right now. One is the frequency of the SAR. Now, I was just saying that, a SAR has to be, so RBI wants a SAR for every topic, right? So here for tokenization, like in data localization, you had to submit a self-certification every 6 months. In tokenization, you have to submit a SAR at least on an annual basis, okay? Whichever period, whether you want to follow your fiscal year period or you want to follow some other pattern, there are two options to do that, but you have to submit the SAR to the regulator. Now, card payment networks, now the regulated entity for card payment networks is RBI. But what about TSPs? So whom will TSP submit to? They will submit it to their class monitor, which is card payment networks, and they will take it further to the other entities. The next is, there are multiple payment entities in the payment ecosystem, and many times it such happens that one entity is playing multiple roles, right? In that case, you need to submit SARs in both the cases. There is a very high possibility that the bank is offering credit cards, debit cards, prepaid cards. In that case, for every product, a different SAR, or the same SAR report can cover the 3 different type of cards as well, but all of these products have to be covered in the SAR. Now, the last and the very important point is, why is it important to comply to this regulation? Because all of us, we don't want to be in an unpleasant situation where we either take a hit on our finances or our reputation, leading to a ban from the regulator, right? So that's it from my end. Thank you for your patience. I'll hand it over to my colleague Sharda. But before that, we have one more interesting question for you all. So you can take your phone, just this is the question.
Okay, so here I think the third parties are not answering the question. So yes, that's, I guess, again, as I mentioned initially, that it's an entire ecosystem, especially in the financial services industry. There's interdependence, right? And frankly, when we do an assessment and a process mapping, we can't make out, who's the vendor and who's the principal, because at times the roles reverse also later on in the process, right? So nevertheless, the third-party ecosystem is very important, and one of the reasons for that consideration would also be the reason RBI introduced, right, the RBI IT outsourcing guideline on 10th of April 2023, about a month back. And I'll have Sharda take us through the details of what that needs. Over to you, Sharda.
Thanks, Punja. So, yeah, okay. So I think it's outsourcing risk has always been there, all right? And in the timeline that Munjal had showcased, right, presented earlier, I think over the last 2 decades, I mean, outsourcing guidelines have been published by both RBI, by SEBI. I think the turning point was the pandemic, right? I think post-pandemic is when people really understood how essential it is to manage the third parties and the extended enterprise. And one of the risks that evolved was digital risk, right? I think globally, in fact, we have a survey that we conduct, Deloitte's Global TPRM survey. And the digital risk was one of the risks that has evolved as a top risk, right, globally. I think from an India standpoint, RBI also took cognizant of this fact, and they had issued, in fact, a guideline. While earlier also we had guidelines around outsourcing risk, but I think last year they came up with a draft, the direction, right, a master direction, and this year they published it in April. Now moving on to the guideline. Do you want me to? Right. Unlike, the focus, right, on this master direction, I think while we've had guidelines previously also by RBI, the focus has been, I think, and which is a very key aspect, is what is IT outsourcing, right? Which are these applicable services? And in fact, what is not? I think that was something where I think a lot of organizations were not very sure of, right? So those were some of those aspects that they covered. They gave you some insights into that. there were some of these that were like IT procurement, right? Hardware procurement was something which earlier previously organizations considered as IT outsourced services, which probably RBI is now clarified saying that it isn't, right? Organizations or services that you've outsourced, like, conducting VAPT, right? Exercises, right? That is not IT outsourcing. Right? And similarly, certain vendors also, right? I mean, organizations which may not fall under the privy of this guideline, that is something that is clearly laid out. Like, again, it's an illustrative list, but I think they have done a good job of it, at least giving a direction to organizations to, get them thinking, right? One aspect is...
Sorry, one part, sorry to interrupt, but I would just mention that, look, we also need to take into consideration, one is the RBI's definition of what's an outsourced service and what is not. That's a regulator's view. The organization may have its own view. So for example, let's say when we buy hardware, right, or devices from a vendor, and that's just an invoicing vendor, which also has a support contract. And typically hardware purchases tend to be very high value, right? 50, 100 crores, depending on size of the bank and so on. Now, as per RBI, it may not be an outsourced service. But the fact is that the internal risk process of the organization also needs to kick in to consider whether that's a high risk vendor or not. Right? Just because because the regulator's perspective and lens is very different. Is that data being shared? Data may not be shared. However, still, when I make a capital purchase of 50 to 100 crores, that vendor is very critical for the bank, right? Because that vendor also has to support the device for the next 3 years, 5 years, or whatever that time is. So the request is don't always build compliance and just have a compliance focused view. Compliance is non-negotiable. But the layers above that also are required to be considered, right? That's just a perspective. Sorry.
Okay. If you can go to the next slide.
So this is a slide saying if you are a third party, I think somebody has a question, right?
Yes,
Salesforce.
Sahil had a question for
Sahil,
us.
what do you need to look at when you're a service provider to a bank, right? What do you need to look at? So that's the manner in which this is constructed.
Right. So just, to take a step back, right, I think one of the things the guideline really emphasizes on, right, risk management, right? And it says that while the regulated entity is responsible from a confidentiality standpoint, from the integrity of the data, right, of the customer that is residing with the service provider. But the service provider also has a role to play in it, right? And some of those aspects are more around, let's say, they need to have a framework, right, to govern their third parties or the entire supply chain, or what would be the fourth party of the regulated entity, right? So there has to be some oversight that you would have, right? If you have, if there's a subcontractor that you are engaging with, right, to render that service, it is the onus lies on you to take the consent, right, for basically getting that subcontractor engaged, right? Then what kind of oversight do you have on that subcontractor, right? That is another aspect that is there that needs to be considered. Some of the other points is having back-to-back arrangements, right, with OEMs, right? I think the focus is more around what we've seen is around subcontractor management, data management, right? So in data management, where we've spoken about, everyone has spoken about data localization, right? The data has to be residing in India. I think that is again a focal point where even if there is any data that is going out, right, be it on cloud or with your service providers, it has to be here in India, right? How you're managing that data, right, through the life cycle, right? So at the time of even exit, right, what kind of practices you have in place, what is the oversight that you have in place to purge the data, right, or both digital or physical copies, right? So these are some of the aspects that are there. There's one more thing that is here, right, which is not covered on the slide, is around incident management, right? Very clearly, I think previously there were, at least in the outsourcing guidelines, there was no specific element on that. But in this particular guideline, very clearly the regulator has said that in case of an incident, it is the onus of the service provider to intimate the regulated entity within 6 hours, right? So these are some of the elements that you will need to make sure that you are adhering to, right, as a service provider. Right? So the onus no longer is only with the regulated entity. It is going to extend beyond the regulated entity to the service providers and how you're going to be adhering and managing that. And eventually you would be seeing these all, right, elements coming probably into your contractual agreement that you would be having with the regulated entities that you would be engaging with. Right? So Sahil, does that answer your question? Sure. Yeah. Yeah. it is notification and they've spoken. Sure. Correct. The RE should be notified. Right. So again, the point is again why we are drawing. See, earlier, like I said, from an outsourcing standpoint, right? Previously, probably the focus or the onus was not there on your, beyond the third party, right? On the fourth parties and thereon. But now that is shifting, right? So you're going to be seeing that the entire supply chain risk is now coming into a focal point, right? It is a focal point, and the regulator is going to go beyond that. So that is where these elements have also started coming in. Munjal, you want to add something to that? Yep. Right? And as a regulated entity, right, what are the elements that you need to be taking care of, right, from this particular master direction standpoint? Now, it's a twofold, it's a two-pronged approach, right? It's going to be a governance framework that you need to have. Of course, if you don't have a governance framework in place, I mean, you're not going to be able to implement it, right? So from a governance framework standpoint, the three key elements was around, of course, an outsourcing policy that you need to have, right? The policy should clearly articulate on the roles and responsibilities that is, of the parties involved, right, across the three lines of defenses of an organization. So it is no longer just, the second line of defense's responsibility anymore, right? It's not just the InfoSec team, or it's not just the IT. I mean, it is going to, or the risk team, right? It's beyond that. So your IT function will have a role to play. Your business stakeholders have a role to play as first line of defense, right? So the roles and responsibilities have fairly been articulated, what the expectation of the regulator is. So that is something which was previously not that detailed, right? The other aspect is around risk management, like I said, right? I mean, they very clearly said, they've spoken about it that, they've not minced their words here. They've very clearly said that the responsibility and the onus lies with the regulated entity, right? So the owner, you will have to have a very strong oversight over your third parties, and in fact, even, have an understanding of what kind of controls are there at the subcontractor level. So these are some of the other aspects from a risk
One
management.
aspect I would focus on, which was not typically, which is there in this guideline, is the exit strategy, right? There is a need to have an exit strategy defined for each of the material relationships. Now, it's very difficult because typically, logically, if you have a core banking service provider, I mean, what's the exit strategy, right? From a core banking service provider or network service provider, who connects 2,000 branches, right? What's the exit strategy? So it's very difficult to define, but RBI's one of the requirements there is to look at exit strategy, and this part on intra-group outsourcing, intergroup. So typically we've done this a lot abroad, where it's called inter-entity outsourcing, IEO. So captive in India is an inter-entity outsourcing, right? Indian organizations typically don't have large-scale inter-entity outsourcing, at least as far as I only know of 2 banks that have that sort of arrangement. But that's the other aspect that has been brought in this guideline, which organizations will need to focus on.
Just 1 minute. I just want to go back to see one of some of the other aspects that we wanted to touch upon, right? For any outsourcing framework, right? The baseline is about how you inventorize your third parties. I mean, if you don't have that baseline in place, you're not going to be able to do much, right? So inventorization of your third parties, of your service providers is an extremely critical step, or key step for you to take this program ahead, right? The other element is around the contractual agreements, right? Now, again, of course, RBI has always, over the years, has given you some guidelines on what a contractual agreement should entail, right? And those are the basic clauses are all there. But like I mentioned in the previous slide, the focus, I think, in this particular master direction is around data localization. They've asked, the organizations to strengthen that, right? Those clauses around data management. Subcontractor management, again, is a very key aspect. So you will need to make sure that, you put in more stringent clauses around that as well, right? So these are 2 of the elements that are there. And as Munjal mentioned about exit strategy, right? This is another aspect that needs to be strengthened. So these are three key points that are there as a part of your guidelines, right? Now moving on to just one of the aspects that is there. when you talk about due diligence, right? I mean, when you're talking about operationalizing the risk management framework, after you've done the inventorization, right, the due diligence that you would basically conduct for your third parties, we usually do it, it is limited to maybe infosec risk or a cyber risk, right? I think organizations need to move beyond that. And that is what is happening. We're doing that with our clients. We're doing this for a leading bank. And right now, our due diligence framework does move beyond IS risk, cyber risk. It's going into you look at the financial risk, we look at the operational risk, right? These are some of the other aspects that we are looking at, considering when we're talking about whether a vendor is fit to, to render the service to us, right? Before we are even at the pre-onboarding stage itself. Right? And of course, during the course of the life cycle of that vendor, right, when you're doing a periodic assessment or a performance evaluation, you're again going to be looking at these elements as well, right? So your SLAs, your KPIs, quality of service, all these will come into play when you're talking about from a performance evaluation standpoint. Yeah.
Okay.
Yeah. Any questions on this? Otherwise, we'll
take them at the end.
Oh, we'll take it at the end.
Yeah.
Sure.
Thanks.
Thanks.
So, but we have one a fireside chat as well. So quickly, I'll ask Lakshmi and Sagar to just cover the cyber aspects of these regulations. I'll move the slide if you want. We'll take it later. I'll move the slide.
Hi. So we've been talking a lot of regulatory compliances. Now here we thought we will actually zoom in bit about specific to the cyber regulatory compliances. There is a lot of overlap with respect to the regulations that we have been talking. Yeah. All right. So RBI has been very proactive, and then the very initial cyber security related framework has been, guidelines have been mentioned in 2016. After that, they have actually released multiple versions and multiple guidelines taking care of the cyber security and resiliency, and also increasing the overall ecosystem, because the focus is more on the digital payments, and then there is a separate circular for the DPSC controls, and then there is a separate circular because there is a lot of lending which is happening on online platforms. There is a separate circular for digital lending. Like that, we have multiple circulars coming from RBI itself. And in addition to the RBI, we also have other payment players like SEBI and IRDI, who is actually looking and then controlling the other financial institutions. There, even now we have circulars coming from certain, which we shortly discussed about 6 hours regulatory compliance, and then showing that overall compliance and then regulatory reporting within 6 hours by all the entities involved. To cover up all these different circulars that we have from RBI and then SEBI and then IRDI, etc., we have a detailed simplified framework, which we call it as CSF framework, which is going to cover simply at various levels of strategy what needs to be covered, at an operational levels what needs to be covered, at a reporting level what needs to be covered is detailed. We put it into a very simplified format, and using this framework we have been doing a lot of assessments for our clients, and we are going to cover that framework now. Yeah.
Thanks, Lakshmi. So with so many compliances and so many applicable regulations, how do organizations make themselves kind of ready for these requirements, right? So we have come up with a baseline framework wherein we have studied and understood all of these requirements. And what we have seen broadly that any of these requirements definitely fit into one of these domains that we have categorized. So it's called our cyber strategy framework, which could be a maturity framework to assess the overall preparedness and the compliance baseline for your requirements. And typically this dwells around 4 broad pillars that we call it. One talking about your overall strategy, the second pillar talking about secure, the third talking about vigilant, and fourth about resilience. When I talk about strategy, more from the organizational governance, your roles, responsibilities, your policy mechanism, your risk management framework, your KPI dashboard, all of those would fall into the governance piece. Security more from the broad aspects of your infrastructure security, your endpoint security, your data security, your network security, your enterprise security, extended enterprise security like cloud, third party, these also get covered. More from the vigilance aspect, the detection capability, the monitoring capability that we have, right from SIM, SOCs, and all those leading technologies. And last but not the least, the resilience capacity. In terms of something goes down, what is the capability of we coming up? So overall, touching the 360-degree controls, the 360-degree frameworks helps us meet the overall cyber strategy requirements and definitely helps our client to achieve that baseline maturity model. Sure. Munjal,
Thanks. Any questions before we move to the fireside chat? Yeah, Vinayak.
Hey, hi, Munjal. Quick query on the other guidelines that fintech needs to adhere to. Is there any METI guideline?
METI guidelines for?
Guidelines for fintechs to follow. I mean, we have covered a lot of RBI-based guidelines, but is there any guideline from METI or any other institutions that we need to follow?
Yeah, they are there, and considering that we were actually focusing mainly for the financial institutions, we have taken that into the consideration. That is also applicable.
So that is not applicable to financial institutions, or we need to look into
it? It will be. For example, if you are going and hosting your applications onto the cloud, which is provided by the government of India, then the METI guidelines will come into picture.
Otherwise not, right?
Yeah.
Okay.
So Vinay, broadly, we have seen that the CSP is getting onboarded, right?
Yeah.
They are getting onboarded based on the METI empanelment parameters. So that is how I think those guidelines do get applied to them.
Okay, thank you.
Okay, so thanks, Lakshmi, thanks, Sagar.
Thanks, Munjal.
So what we thought we would do next, as we conclude, is look at an end user view of this. So with that in mind, we asked Vipin from Visa to join us. If Vipin, if you can come on stage. Vipin heads risk services for Visa in India and South Asia. He also looks at the entire ecosystem for Visa, and his responsibility is to make sure they get secure. That's a tough job. And in his background, he's earlier worked with the regulator themselves, RBI. He's worked with NPCI, HSBC. So very broad experience. Happy to have you here, Vipin. If you can just take your seat. We'll go through a couple of queries with you.
Thank you,
on
Munjal.
experience. Is it working?
Can you hear me? Yeah. So always good to be on the right side of the auditor.
No, thanks. So, Vipin, you firstly have a very important role within Visa, and Visa is the largest payment processor in the world, right, in terms of volumes of payment. So I'm sure you've seen different scenarios and different challenges, right, as you look at compliance-related challenges within your organization or within the ecosystem, and based on your broad experience as well. So if you could give us a view, we're not talking specifically about Visa, right, but generally, globally, what are the trends that you're seeing within payment technologies, banking technologies, and what is happening globally that we could also take away in India?
Thank you, Munjal. So as Munjal said, a lot is happening across the globe, and looks like all regulators are relatives across sector, across geographies. It also depends on the experience that you had with them. Since the payment and fintech landscape is so much evolving, there is a learning or an upgrade which the regulators are doing themselves. So that's the first trend we see. And what are the sources? Sources are partners like Munjal, who go and update them on what's happening across the industry. Partners like you who go and tell them what you are planning to do. That's the second form of learning. Third is, unfortunately, incidents which happen, not a very good way of learning things. So it is in this context, what we are seeing is that as we evolve, the regulators are also evolving. And across all three buckets of policy, supervision, and enforcement. And enforcement is an unfortunate thing. It happens when things go bad. But from both a policy and a supervision perspective, what we are seeing that they are getting expensive, and particularly coming to the fintech community. And it's because that you have promised so much, it's because that you have delivered so much, they are getting more curious. So first their curiosity increases, then they figure out, okay, this is the shiny hood, but we need to see underneath. That's where they start regulating you. So one thing we are seeing is more and more entities globally are coming under the purview of regulations. Focus is on fintech, financial institutions, have been their partners for a long time. That's one key theme we are seeing. Second, and the topic covered, Shada covered it in the outsourcing. And outsourcing is becoming a very critical activity for them globally. So much so, they have imposed on PSOs as well the outsourcing requirement. So we are what in the parlance of RBI networks are payment system operators. And all those entities who partner with us are payment system participants. So the outsourcing guidelines apply to us in India, apply to a lot of other geographies. Third, the focus has been rightly on third party. So third party risk management is becoming a very key. That's a trend that we are seeing globally across all continents. Last one is on, and nobody loves bad news. Your boss doesn't love when he hears bad news later, so bad news doesn't age well with them. So the last trend that we are seeing is that they are getting really maniac about incidents being reported to them, and you called it out. So the timelines are very aggressive, but their expectation is, please notify us, and that's our experience to some of the queries that came up earlier, what happens within the timelines, 24 is too strict, etc. So our experience is we notify them, and once the notification has been done, we work with them over a longer period of time to give an RCA, find out what happened, etc. Coming back to the people in the room, they are also very curious on, as I mentioned earlier, what you are doing. So they have become more open. In fact, you would be aware across multiple geographies we are seeing there are now a sandbox approach to regulation. So they are driving what they believe is responsible innovation. And like some of you as innovators would want to be left alone, but because of the promise of your product, they don't want you to be left alone. They really are taking a very constructive sandbox approach to how you can drive and make a change to the digital economy.
Wow, thanks. In fact, it's interesting you mentioned that, Vipin, about regulators learning from us. I was at a third-party risk management event last month in New York, and 25% of the audience was regulators. And of course, in the US, there's not a single, just the Federal Reserve, right? It's FDIC, it is OCC, right? Office of the Control of Currency, multiple regulators. But yes, now in the context of India, right? As you're aware, RBI released a Payment Vision 2025, right? Which talks about e-payments for everyone, everywhere, every time, right? And payment space is the one that's most evolving in India. It's possibly the most successful as well. We've had record high credit card transactions, UPI transactions, right? So how do you see this shaping into reality in the Indian context, right? The payment vision, and what aspects are really getting built around the payment side in India?
So Munjal, you mentioned the report earlier as well. And to those of you who are not aware, so RBI has been doing it for a fairly long time. This is the 5th or the 6th edition of what they believe is a strategic roadmap for the country. It has been maturing over a period of time. And Munjal spoke about 4 E's, which is the core theme of the vision document. The beauty of it is it touches all of us in the room, all of us outside. It's very comprehensive, etc. And while first part of it is a good scorecard of what RBI believes they've done for the previous report, there are 45 what they call goalposts, which they have mapped to 4 or 5 I's like integrity, innovation, institutionalization. It's a very good report to read, and for those of you who want to operate in space, it gives you a perspective of what the regulator is thinking. And it's not something which has been created in isolation. It's a consultative process which the regulator, and that's a key difference we are seeing across all geographies, where regulators follow a consultative approach, and the document is an output of the consultative approach to that. We also have contributed to that, and I'm sure most of you would have given feedback in some form and shape which is captured there. How does it shape out? So I think, Munjal, you would be in a better position to answer. And very honestly, I have gone through those RBI circulars, but the fantastic job you did, or your team did in creating a visualization. I don't think I have ever understood the RBI circular by reading them till they were presented in a different form. I believe that uh, if you are able to convert the payment system vision document in that format, it will become something which is digestible to us. Having said that, let me try to put your hat and try to do a framework-based of approach. So it's about 4 Ps. Because you are fintechs, because we work in an industry which is regulated, and we can keep discussing whether we should be regulated or not. First thing is, don't lose your passion. So that's the first P that I will talk about if we want to make the change. And Munjal said we have done a lot on RTP, on card side, etc. And India being a most fintech-aware market, please continue to do that. Second, partnership is most important. You can't do it all alone. So if you have to partner with the regulator, partner with card networks like us, please reach out to us. We are happy to do that. Third is what I would say, look at protection, because that's what the regulator will look at. While he will look at your product, he will also be interested in how you are securing, how you are making it. While convenience is one part, but his focus is on more on giving customer a confidence in using your product. And last is pilot. So please keep coming with your pilots, fail fast, don't be afraid of doing that. I hope that answers your question.
No,
Munjal.
that's very good 4 Ps to remember, along with the marketing piece of Philip Kotler. No, thanks for that, Vipin. As we look at, therefore, there is one reality that's going to happen with this payment vision, right? Large parts of that being put into place, starting with Aadhaar and all the other components that are there, right? Now, that will also create an impact on the changing regulatory landscape, right? So we already aware of some of them, be it data localization, let's say tokenization, and so on that are coming in. Given the amount of innovation and a country like India, which is underbanked, it needs a lot of innovation to serve people, the unbanked citizens, underbanked citizens, as well as citizens who are adequately banked, but they need more convenience, right? Because we need to move large amounts of money within our economy. What are any thoughts on what will change, or what is coming next as far as regulations are concerned? So if I look at an example, we've had cases in the US, right, with the US regulator, where they've asked the bank to identify the key offshore partners, and the regulator has actually flown in to audit those partners, strategic partners, on their own. So they've not relied on a report provided, but they have said we will proactively go and audit, because if this bank is systemically important, then by that definition, the third party becomes very important for us, right? And we will therefore go and audit. So I've also had experience of handling these regulators who conduct audits. So any thoughts on, based on your interaction, with regulator, what is the changing nature of regulation that we can expect in India?
Oh my God, that's very tough. Crystal gazing, reading regulators' mind. And the joke in the payments industry is, have you heard of the day of the week effect? So most of the circulars come out on Friday, including 6th April 2018 data localization circular.
So weekends are bad.
Or good, because it gives time to everybody to think through it. Activity is not that high, etc. Except for risk professionals, our life is busy on weekends, because that's when banks are lean staffed. We find fraudsters attempting more attacks, etc., etc. So having said that, you are right. In fact, they are more curious. Some of them have empowered themselves, and globally again, through acts. So there is a Payment and Settlement Act in the country, which came into being in 2007, if I remember correctly. Interestingly, and this is a counterpoint I want to make. Before regulations were there, and I don't know how many of us were aware that before 2007, this country did not have payments regulation. We did not see innovation flourishing. We did not have as many partners. After 2007 and last 4 or 5 years, we have seen a gold rush for being into this space. So while regulations we may not like, but given the India experience, what I believe is lot of the investments have started flowing in after the regulations came. Because then you get that confidence, somebody is watching us, somebody is creating a roadmap on what to do. I can go and talk to him, etc., etc. So that's one counter view I have on that. The second is regulations will keep evolving, form factors will keep evolving. 6 years ago, we did not have any RTP system. Now RTP systems are proliferating across the world. Form factors will keep evolving, etc. I think it's on both sides of the table, it is the ABCD philosophy which is there. You as service providers, we as card payment networks and regulators assume nothing. That's the A. B is believe nothing. C is challenge everything, because that's where the innovation emerges. D is discuss everything. And today, looking at your presentations, Munjal and Lakshmi, your presentation, I added the E. E is the output, so evidence everything and examining everything. So that's where the regulatory landscape, I believe, will continue evolving, irrespective of form factor, players, etc.
Wow. You're just helping me refresh all my alphabets now. Vipin, thanks. No, I had a last question for you. I think we are not between lunch, so I think we can delay the audience a bit. There are a lot of third parties in this room, right? Because they are connected to card payment networks, payment processors, at times banks as well. So if Deloitte is also a service provider, right, to many banks and let's say organizations like Visa and so on. So what would be, based on your experience, right, your advice to third parties, partners, call it whatever you may, who work with regulated entities? What can they do to make life for their customer easier and therefore life better for themselves as well?
Oh, that was not part of the RFI which you sent to me. but I'm happy to answer. And for those of you who don't know, so Munjal and my love story started on Tinder for Professionals. That's LinkedIn. So I downloaded a Deloitte report, and it came from his email ID. Subsequently, to my mail ID, I called him up. We had a 1-hour conversation, and we forgot about each other. And then the marriage maker was Reserve Bank of India, which issued the guidelines on the SAR audit, its applicability to us, and then we found out that he is a partner. Our partnership has bloomed. Thank you so much. Thank you to Lakshmi, to Sanjana, and all partners who continue to work with us. So in the fairness of all disclosure, they are our partner for the system audit report. SAR is the term they were using, and it's so confusing. So just remember, SAR is system audit report that we have to submit to RBI. That's the 20 domains of InfoSec. That's the great work that you have been doing for us. Then came and everybody wanted virtualization, devalue data, came the great tokenization circular. And everybody's still scrambling around what to do with it. It has been a journey, and the RBI has followed a very consultative approach, delayed some implementations, etc. So thank you, Munjal. You have been helping us as well as a lot of third parties in the room on ensuring that they are compliant. You really helped me make sleep peacefully. So that's one thing I want to acknowledge. Second, what we want from our TSPs, if I want to give a short answer, please, guys, love us more. So show more love to us, partner more with us. We are happy to be there in the market. We have been there in the market for the last 40 years. We'll continue to serve us. Help us create more innovation. And you mentioned about India being underbanked, unbanked. That's a huge opportunity where our partnership can make a difference to the way money is paid and collected, and securely, because that's what, as my day job of being a risk partner to all of you, I believe there is a more opportunity in collaborating, in making sure that we continue to innovate.
Okay. No, so I was also happy. My wife is not on the audience to hear about a Tinder story. She doesn't know. But thank you again. Thanks, Vipin, for your presence, and thanks for sharing your thoughts. So audience, we are about 1 minute, 30 seconds from the 90-minute slot. So we can take questions. I can see a lot of hands that are happy to take questions. Sure, sir.
Hello, sir. I'm Vinod Singh, and I was in the next hall, Kaveri Hall, few minutes back, means of half an hour back. I was listening to the person who is from RBI, and he was saying that the tragedy of our business is that we are mostly dependent upon third parties. And in this hall, I am sitting with the third parties. So how you see that third party will remain as the main party in future?
I wish that story continues. So, see, the tragedy or the opportunity comes from the experience. So there are scars which remain, but scars don't mean that we don't move forward, we don't progress forward. And incidents or events are points in time. It's how we respond to them. Like data breach, if data breach, our first reaction is that party must have done something. Please, let's accept it. He's been a victim. He's not a criminal. He's a victim. So if we shift the way we think about how things happen, and there are third parties which we have seen who have responded so differently to, and talking about data breach only, in early 2020, one of the major party, or at least the news emerged, is impacted. The way they have responded, the way they have taken things in stride, that's one example I'm giving. But if you behave irresponsibly, you are leaving a different impression on a regulator, on partners like us. And from our perspective, we follow a carrot and stick approach, because on trust, we are giving you a license. We believe that, and that is a chain which flows from the regulator. And Munjal, you called it out, and Sanjana spoke about the class monitor approach, but we believe it's more of a partnership approach. Because all of you are doing a great job, there are so many of you, RBI believes that we can partner with them, and we are happy to shoulder that responsibility with Reserve Bank of India.
I had one other way of looking at it as well on this third party stuff. You know, I was recently listening to an interview by Mr. Koshi, who leads ONDC, right? And his input was this. He said, look, ONDC is not to compete with Swiggy and Zomato, though there's a lot of talk that it will, it's going to be competing. He said, that's not objective. Our objective is to make e-commerce 25% of the GDP in India. That's the first objective, right? We want to grow the overall market. And second input that he gave, he said, look, there was talk about discounts. So he said, we believe that Swiggy running, logistics, restaurant signing, right, order fulfillment, payment, the platform itself is very inefficient. That's the reason even if they charge high fees to the restaurant, they still don't make money, right? A platform provider should only run a platform, which is what ONDC is. ONDC is only a platform. They have a sell side, they have a buy side, right, that they link up, but they don't actively run anything, logistics and so on. And they said that's the efficiency. So if I look at that within the payment or banking space, I think there are specialists required in every part of the value chain, right? And trying to imagine that one entity will do end-to-end is very inefficient for everyone, right? So therefore, the dependence on third parties is never going away or out or anywhere. It's only going to grow, right? And fitting in those pieces and identifying roles and responsibilities is where I think it's going to add value. Yes, sir, you had a question? If somebody can give him a mic.
Munjal, just one comment on that. You mentioned earlier there was a four-party model on transactions, which is now N-party model. And simple way to remember was we used to call it manic chain, merchant, acquirer, network, issuer, cardholder. But the amount of third parties that we see, only expectation, and the first expectation we as a card network is, please register with us. Because visibility is such an empowering tool. And as I mentioned earlier, bad news doesn't age well with anybody, any regulator. There was an incident in Southeast Asia, and the regulator discovered that there is a major breach at a third party which was not registered. The amount of noise it created. Visibility always helps. We can monitor. We have tools to monitor globally. We can come back with you much earlier than when the incident happens.
Sure. Yes, sir.
Good afternoon. My name is Suresh from InSpark Solutions. Though I'm in the cybersecurity area, my question is regarding tokenization.
I can't hear you.
Yeah, sorry. Can you go?
Yeah.
I'm Suresh from InSpark Solutions. I'm basically in cybersecurity space, but my question is regarding tokenization. When we talk of tokenization and hiding the card data from all but the issuers and the card networks, what about those, what about card personalization third-party service providers, as well as those service providers who host the payment switches themselves? How do they get regulated in this thing? If you can just tell me this, these two angles.
I can answer that. Sandra, you want to take that? I think she explained on where tokenization is applicable, etc. And what happens is, so on the perso bureaus, etc., there are other requirements as well. And as Munjal and team mentioned, it's just not one regulation or one compliance. There are additional compliances or obligations networks put. There is the PCI framework on how cards needs to be personalized, etc. That is a very mature framework which is applicable before anybody gets into that business. The other thing to understand is, while in India the tokenization mandate is there, in other countries as well, we are proactively encouraging, and merchants don't follow the same stringent standards as perso bureaus, etc., on PCI compliances. That is why they become more vulnerable to data breaches, etc., victims, as I mentioned earlier. That's why to get these entities also into the framework, tokenization was thought of. Just to clarify, you mentioned other entities, payment switches, etc. So if they are a part of the token chain, they will definitely be part of the audits, compliance requirements, etc.
Sure. Thanks. A lot of, I mean, is there a mic? By the way, we can also meet later on outside. I mean, but we can take a query or something.
Sorry, so you were talking about the new requirements that keep coming in. Like a few months ago, there was a requirement about pseudonymization, and then that circular was also pulled back. And do you foresee any of those requirements coming in future, especially around the privacy bills? And second question, this is not more of a question, more of your opinion. How do you see the role of a CISO evolve in this current space? And where do you see the responsibilities and the lines between a CISO and a compliance officer? Thanks.
At least what, maybe I'll start, but firstly, the second part first. I think CISOs have a very tough job ahead. Most of my clients are CISOs within the organization. And I think they have taken on very tough jobs. So I thank that I'm a consultant and not a CISO, right, as an end user. What we can see, though, on the evolving nature is, as Vipin mentioned, as form factors evolve, right, requirements and the regulator is also trying to keep pace with the manner in which they need to start changing the regulations. Right, which is a good thing because at least we see a more matured approach now, where the regulator either puts up a thought paper or a set of guidelines and invites comments, like PDP as an example, right? It's been, maybe for them it's on the other extreme because it's been out there for so long and so many comments that balancing both sides has become difficult. But to your point on privacy also, I think as the bill becomes an act, right, whenever that happens, winter session or whenever that's going to happen, I think it will throw up a lot of interesting scenarios and requirements, especially for the financial services industry. What we've seen so far, for example, see, if you look at a federal act, we also had the IT Act, the Information Technology Act I'm talking about, right, which was way back in 2000, then got revised in 2008 and so on. What we anticipate in the financial services industry is always that the regulator will have a take of their own after the federal act is passed, because the federal act is applicable to all organizations within the country, regardless of industry and sector. However, the regulator within a particular industry or a sector may want to have additional requirements or slightly modified, which they are free to do as well, once they follow the internal processes. So I think that's what will happen going forward on data privacy as well. I don't think it'll just be the PDP. There could be a financial angle, a bolt-on on top of that, that RBI may choose to issue as a regulator for the financial services industry as well. Okay, we are definitely out of time. So what I would suggest is, anyway, we have a stall there outside, which I would love to meet you there. There are also some giveaways if each one of you can collect it as you go out. Again, thank you for your time. Thank you, Vipin, for your inputs.
Thanks, Munjal, for inviting. It happened due to an error. So I think, Lakshmi, I can confess, you goofed up. So I am forced to be in another panel in the evening today. Thank you.
No, the audience will be richer. Thanks.